Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. It is the end of the week. Listen, go ahead and hit that like, subscribe, and notification bell. Thank you guys that just keep doing it. It's such a small price to pay for such, building generational wealth. You guys are not paying anything. I just want to continue to give you guys the best that I have. And you guys help me out. I'm going to continue to help you out. That's all I'm saying. So the earlier you hit the like button, the better the video performs. And it keeps me going. Such a small price to pay. Love you guys. Remember, anything I say is not a suggestion to buy, hold, or sell. And be careful not to fall for spam in the comment section. Never send money on crypto to anyone on anybody's page. Let's talk about what's happening in this market. This market will probably, by closing bell, I'm making this, we still have about an hour and 15 before closing bell. We'll probably be down negative over 800 points in the Dow. It's just, it's a falling knife. It's Friday. I'm going to say, for those of you that want to stop this video right now and go and do your $5 a day now, these are the days that we look towards, all right? And then I want you guys to come back, all right? Hear the rest of this. But I'm doing my $5 a day now. I expected today to be a sell-off. We had three green days. And so now the market has literally taken back everything. And it is like I've been saying, the biggest threat to the market right now is the Fed. So earnings giveth and the Fed taketh away. And so yesterday, Fed Chair Jay Powell was talking. We all know by now, whenever they talk, the market has a negative reaction. And Janet Yellen was talking today, right? And CNBC was, thanks a lot, CNBC. They were interviewing both of these characters. And, here we go with the hawkish talk again. It's the same stuff over and over. All right. So let's look at what's happening. I took a few notes. I want you guys to know that the only thing I see that could be positive for the market next week, right? If the Fed keep talking, they need to talk about peak inflation, which may or may not be the truth, even if they say it. Okay. But if they talk and start talking about peak inflation, meaning inflation peaked out in March, that could be good for the market, right? So that's just an if. If I had my rather, I would rather they both shut up and go away. They're all shut up and go away, state by state. Just shut up and go away for right now. Just let the market do what it's going to do. We know that you guys got to be aggressive. And, right now, while the market can handle it, right? Not necessarily the stock market, but the economy. So they have to be aggressive while the economy can handle it, not the stock market. Just remember that, right? So the stock market could still have a sell-off, but long as the economy can handle it, then the Fed feels like it's the best thing to do now is to do these interest rate hikes. And now they're talking about 0.5%, and they're even talking about as aggressive as 0.75% or 75 basis points if necessary, if inflation keeps running wild. Follow? So now, what do we have coming next week? We have more earnings coming next week. And I want you guys for homework, for those of you that are new traders, leave me in the comments, what are the three big companies? You know what? Let me just go ahead and tell you. Google, Microsoft, and Apple is going to be reporting next week, okay? Now, if they have a good earnings, that could be short-term good for the markets, okay? So Google, Microsoft, and Apple, those are three major players in the entire stock market. Now, we are going through a season where even if they have good earnings, the stock doesn't run like crazy, right? Because you got bad stock like Netflix that's dragging the entire market down. Hopefully these can kind of prop them up a little bit. But if they're bad and the Fed are still talking, it's just not going to be good. Having said that, there are a lot of stock out there. There's some stock out there that have sold off 90%. A lot of stock are out there, 52-week lows. Major companies are. And so these are some of the things that I want to share with you guys. Also, too, Let's look at this, good people. Let's look at some of the things that I want to talk to you guys about. We always talk about when to buy, but you guys know I'm stressing when to sell, when to profit take. Okay. One of the things that we do a poor job of is profit taking, especially in a volatile market like this. Let's go to the charts. So as we can see at the time, remember, I have an hour and 10 minutes left of the trading session today. Okay. While I'm making this. So there's still an hour and 9 minutes exactly before closing bell, right? But let's look at this. The Dow is down almost 800 points now. S&P down, Nasdaq down. Sometimes the Dow will have a little bounce back towards the end of the bell. Okay. But I just don't think it's going to happen today. I think we'll probably be down more than 800 points today. Unfortunately, I hope the market proves me wrong. Let's keep it going. So we also know that if this is happening, that the VIX should be green. And there we are. The VIX, the volatility index, look at that, up 21%. All right. And I want somebody, because remember, good people, we're not just going to talk about stocks and what's the hot stock. We want to learn how to be good, savvy traders. I don't care if you're 18 and you're listening to me. I don't care if you're just into crypto. If you learn the stock market, you will kill it in crypto. Take it from me. So look, good people, the VIX, the volatility index. I want someone to comment in the section. What does this, here it is right here. All right. What is the VIX? What does it do? What does it tell us? One of the things that I will tell you is when this is high, these are generally low. Okay. So I want somebody to leave in the comments to tell me, or to tell everybody, help the rest of the family to say, what is the VIX and what does it gauge? Okay. What does it measure? And if it's green, what does that mean? And if it's red, what does that mean? Okay. Let's keep it going. So now let's look at this. Good people, you guys know we've been talking about this, right? We've been talking about these plays, right? And so I'm going to end this week by saying these are travel, okay? This is called travel and leisure. This is an entire sector in the stock market. Travel and leisure has been good. Actually, airlines like American Airlines have had the best bookings ever. The best bookings in the history of American Airlines. And so that's where they are right now, okay? So if you look today, yeah, we're down. Norwegian is really down, right? But here's what I'm going to show you. In 5 days, you're actually mostly up. You're actually mostly up in 5 days, okay? But if you go out a month, as you could see, you're green. This is really good. This is 1 month. So if you did 10% in a year, you're killing it. If you did 5.8% in a year, you're tracking just behind the S&P a little bit, the entire stock market. Parks and hotels, not so much. But if you go to parks and hotels over the last, the last 7 days, you're good. Okay. But this is the month. Remember this. But if you look at American Airlines, then you could see you're up almost 21.5%. But here's the kicker, good people. I want you to understand this. This is the way seasoned investors invest. You don't buy one or the other. I've been sharing these with you guys for probably 8 to 10 days now. So what I want to tell you is, if you take and diversify between these, like I did, if you not just buy Parks PK and not just buy American Airlines, if you just diversified between all 4 companies, then you would be up on average about 10.5%. Follow? So if you put $1,000 into each, if you put $100 into each, if you put $50 into each using fractional shares in that month, you would be up about 10.5%. Now, for some of you that are new, you say, oh, that's nothing. For them, some of us that's been trading for a long time, you made a killing in a bear market. So the point is there's money to be made in some of these unsexy stocks, okay? In unsexy sectors. And so I just want to continue to educate the family so we can continue to make long-term money and not just chasing hype and being volatile. And then our risk tolerance is extremely high, okay? Our risk level is high. So I'm going to end by saying I want you guys over the weekend to study PEs, price to earnings ratios, because the stock with the high PEs, meaning the company is expensive to buy, then those are the ones that's going to get beat down the most during this period. And when the recession does come, those are the ones that's going to be beat down the most. So to be honest with you, over the last 9 months, the high PE ratio stock are the ones that's getting beat down. The expensive stocks. They're paying the price right now. And so I just want to help you with that. And in closing, for those of you that are following the $5 a day challenge, we are going to $5 a day into millionaires. I'm going to leave the playlist right here yet again. I'm going to leave the playlist. I want you to watch these videos in this playlist, and I'm going to update mine. But today will be a good day because we look for the red days. And so, for instance, if you haven't bought in the last 2 weeks, 3 weeks, a month, you could literally catch up. Remember, $5 a day. Now, I give you a basket. I got 3 portfolios, and I give you a basket of stock in each. And so, in my in one of my portfolios, I have 3 that are kind of in the same sector, right? And my ETFs. But I did that to show you could pick either 3. As a matter of fact, you pick 4 of them and put $38 a month by buying fractional shares, or $5 a day in it. So at the end of the month, that's $38 a month divided by 4. Okay. So just take 4 of the stock. Calculate what $5 a day is. I believe it's $38 a month. Just correct me if I'm wrong. And then divide it by 4 stock in 4 different sectors. Okay. Though I have 3 portfolios, just pick 2 from one and then 1 from the others. Or you find yourself what you think will be good 5, 10, 15, 20 years from now. And then we're going to continue to trade and get in and get out, just like the hotels, right? But we're actually going to also build generational wealth by investing. Now, I will tell you, with the travel and leisure stock, I will tell you it's about time to get out, because the rule of thumb for profit taking is 20 to 25%. So while you're trying to hit a home run, I can make 20 to 25%, 10 times while you're stuck holding a bag while it's bleeding red. I can continue to make that 20 to 25%. And at the end of the year, I'm going to win. At the end of 5 years, I'm going to win. At the end of 10 years, I'm going to win. And when I get ready to retire, I'm really going to win. And sometimes we could trade ourselves broke. Okay. So I stress here to invest as well as trade. You guys have a blessed weekend. Listen, make sure you check out the links below. All right. So I'm going to go over this real briefly. You guys know, if you don't have Moo, download Moo, and they are going to make sure you deposit $100. Okay. They're going to give you 6 free stock worth up to $3,500. Do that. Then download Webull. Webull has extended their promotion of 5 to 6 free stock by depositing 1 cent, 1 penny, and you're going to get 5 to 6 free stock worth up to $9,600. All right. So let's just get those 2 funded and going. Webull, deposit 1 penny, right? Moo, deposit $100. Okay. And we are going to show you how to make money with both platforms. Okay. Going to leave it right there. Good people. We love you guys. Live, love, laugh, and learn. Peace.